Hey friends, today we'll discuss a seller strategy in this video. We would like to see how an option seller could potentially take advantage of volume-based analysis. So let's go to our dashboard and look at one previous day's data. I'm not going to explain the basics of the platform. You already know about that. Our previous videos can help you understand that. However, what I want you to focus on is, let's say when the market opens in the morning, after that we are looking at when the price reaches a particular strike. Let's say 916 on that day, it opened the first candle and after that we came to 25,850 at 916. Why are we looking at this? No particular reason. You can essentially wait for 920, 919 and then take your position. But for this particular strategy, I am saying I'll look at price to come to a particular strike and then I want to take my decision. Now that this particular candle has broken the strike 25,850, we are at 25,850 right now, let's say. I want to take my decision and I want to see what we could do at 916, right? So since we are at 25,850, at 916, 25,850, I want to see what's happening in the morning, right? So I'll come to the same strike 25,850 and then I will see at 916 what is the situation. At 916 we have got 236,000 call sellers, but we also got 448k put sellers. Because put sellers are way more than call sellers, I will not look at what's happening at the price. I'm looking at volume. We predominantly base everything on volume, right? So I'll trust the volume. And then what I'll do is I have chosen a backtesting platform as Stockmark. You could pick any platform, whichever you're comfortable with, right? What I would do is I'll go to Stockmark. I've selected the date here. I'll select 917, 2 minutes from the morning. Since puts were stronger, I'll try to sell a little deeper in the money. That's my style. Again, doesn't necessarily have to do deep in the money. You could also do ATM or slightly OTM depending on what is your style. We'll talk about it towards the end anyway. So I'll take a little deep in the money. I want to take an asset with 200 rupees price and I will buy an asset that is ATM or slightly OTM that is somewhere around 50 rupees price. The reason we do it is if I sell alone, the margin required is 2.7 lakhs. Now I don't want to pay so much of a margin. So what I'll do, I'll also buy an asset that is near 50 rupees price. So my margin comes down to 98,000 rupees or 1 lakh, which I'm okay with. So we have placed a sell order. Let's say, put sell order we have placed. And now we want to see what will happen next. So 916 we did put sell. At 917 now we are following the data. Now the idea is to not to have anxiety. We want to just flow with the data. We don't want to worry about what's happening in the market. Whatever volumes are telling us, we will react accordingly, right? So at 970, puts are very strong. Okay, I'm not worried. I'll continue with my put position. 918, calls have built up, but puts are still strong. At 919 too, calls are becoming a little closer, but puts are still strong, but calls are building up very, very sharp. Now, there is two things you could do. If you have the budget, at 919, since calls are also building very fast, you could add a call position immediately. Okay, like for example, I'll go to here at 919, which is about 920. I can actually say that, okay, calls are building up my position. I don't want to lose out. 200 or 180, I'm adding the same thing. A 45 rupees asset I will add. Otherwise, if you don't want to hold two positions, because if you're holding both the positions, your margin required will be 1.89 lakhs. Now, if you don't want to do that, what you could do is wait for puts to exit. That is at 920, right? So at 920, you could get out of the put position and look at the call position. Since calls are building very fast, you could say that I am interested in building the call positions instead. So anyway, even if I had taken two positions, I had no reason to continue with put beyond that particular time. Why? Because puts are slowly looking like they are not confident. They exited some of their positions and calls were steadily building their positions right here. So I'm more interested in calls. After that, calls are building, puts are building. Now, as long as calls are building, I have no reason to panic. Now calls are building faster than puts, which is good. Calls are building faster than puts, which is good. I'll continue like this, right? I'm only looking at this particular strike. You could continue to look at ATM strike, of course. I will continue till about 10 o'clock when I see that some big red candles or volume is trying to exit. Till that time, I'm happy. I have no reason to exit or panic or exit from this position, right? So morning I had taken a put, but because call sellers were increasing, I had taken call and I had continued till about 10 o'clock, let's say. The same thing if I do here till about 10 o'clock, for example, 10:01. My profit margin, entire trade has turned around and I have got somewhere about 1,600 kind of a profit, which is brilliant, right? Why? Because we only tried to go purely based on volume, no anxiety. Our decisions are purely based on volume. We're simply following the volume and based on that we are trying to take a position. I'll tell you one more hidden thing here. One more secret could essentially change the whole game altogether. Now, we have at 920, we have taken out the put position and we have gone into call, correct? Now, once you continue like this, the moment you see puts are really weak at 929, what I want you to do is you could then say at 929, we'll go back to 9 o'clock, 929, which will be like 930 here. I'll say I'll add a put buy leg, a third leg. So there are now call buy, call sell, and also a put buy. Why did I take put buy? Like we always say, if sellers are exiting the market, right? That's when as a buyer, you'll probably make more money. That is the reason at 929, we said we will add a put leg. We'll do the same thing. We'll continue till 10 o'clock. Earlier, remember, our profits till about 10 o'clock were somewhere in the range of 1600. Now if I go until 10:01, our profits have turned out to be somewhere close to 4,312 rupees. That is because we've added a third leg, and the buy leg ended up making more money or adding up more profits to us. But remember, the third leg was added only when we saw that puts became really weak. We didn't add it along with calls, because why we did not add it when we added the calls? Remember, 920 itself we had a call leg on, but puts were still building, right? The moment we saw they became weak or they kind of exiting their positions, we understood that puts did not have the steam, so then we added the put leg. Doesn't have to be 929, you could add it at 930. The idea was to be able to capture on the other side, to be able to capture the premium increasing on the other side and hence add the second leg. So we did this at 10 o'clock. We are no more confident, and we will say we will exit all of them. We took somewhere about some 4,000 rupees. If we did not have both the legs active at the same time, your margin would have been 1 lakh itself. And this is fairly a very good profit for 1 lakh kind of a profit. Then we came down and we came to 25,750. 25,750 is when again we will start analyzing. Remember, like we always say, always do your analysis on ATM strike. So then we will see at about 10 o'clock we exited our position, and then at 10:01 or 10:02 at the ATM strike, now we see that calls are becoming weak and puts are increasing. Puts are basically building up their positions. Calls are losing, puts are building. So at 10:02, I feel like, okay, I think I can take another put side position. So let's go to 10:02, 10:03. Now I want to sell puts a little deeper in the money, and then probably ATM itself I will take. Done. So I've added a put position, correct? Then, like we did before, we want to add the other side also we want to capture it. At about 10:07, when calls have completely more or less given up, I want to add a call leg at 10:07. So let's say 10:07. ATM strike itself is good enough. And then I will say I'll go back. Remember, all of these decisions we are doing purely based on volume. We are not looking at price at all. Then we will continue. I have no reason to exit until, let's say, somewhere about 11:22, right? Till about 11:20, 11:22, we have no reason to exit. Puts, I'm happy. Maybe I could continue as well, but let's look at till 11:20 at least. Till about 11:20-ish. Now, this is our profit for that day. How we did it? We did it purely based on volumes. We did not look at price at all. We just followed the volume data, and based on volume, whatever it told us, we tried to continue with that. I think this kind of a return, I'm more than happy. If I get it monthly also, it is brilliant, isn't it? Forget one day. Even on a monthly basis, if this kind of result, if you are getting, it is an excellent result. I would rather take it. I'll exit. If I want, I can further analyze. The concept is the same thing. What you want to do is you can further analyze 11:20. I think we were here. We could have probably continued for the price to go until here, and then again continue to analyze 850, 900, whether you want to continue with call buy or put buy, etc. You could have taken one more downward momentum also. So probably that was also possible. Now, not necessarily that everything will work in profit. Remember, our first trade was in loss, right? We would have taken almost minus 1,500 rupees or minus 1,000 rupees kind of a loss. And that is possible. That is absolutely possible. The idea is to see, can we capture the momentum? What are sellers telling us? Are they strong on the call side or are they strong on the put side? We want to stay with them. At the same time, we want to add a third leg if possible. Only when we feel that the other side has become weak, we will add a buy leg on the other side. Try to capitalize on both sides. That is the whole idea. Okay. Then the next question is, why did I sell deep in the money? I sold deep in the money because I just wanted to capture more premium. For example, in this case, we took at 192, we sold at 192 and we bought at 93. Now that was possible because this had more premium. If I had taken, let's say, ATM of 40 rupees, from 40 it would have gone mostly to 20 rupees or 10 rupees. I would have only received 30 rupees kind of a premium. But here we have received, I think, close to 100 rupees premium. Now that is a lot. That is the reason why I went deep in the money. But then the buy position also, I'm trying to either take OTM, depending on what is the ATM price. I'd like to go to somewhere close to 50 rupees. 1/3 of the price is where I would like to personally look at. But then the idea is slightly different, right? You will also have to remember that if you're selling ATM instead of deep in the money, on expiry especially, if the price doesn't move, you will still be able to make some money through theta decay. But if the price moves, if the momentum is there, then deep in the money obviously will give you a nice premium, right? So remember that. If you're not sure if the price would move, depending on volume, again, you will know that. ATM you could sell and slightly OTM you could buy, so that you can at least take advantage from the theta decay. But if you think the momentum is possible because the other side is weak, and this side is essentially building on a lot of sell positions, sell a little in the money, buy a little OTM or ATM depending on what the price is, and that should give you higher leverage. Hope you understood the idea. We would love you to do the backtesting, go to historical data. Like I said, it's not like this is a magic solution. There are days when it will not work, and I'll tell you exactly when you would feel frustration. On days like this, it would perfectly work. There will be days like this when in the morning you will have a lot of trouble. Irrespective of what, in the morning you will have a lot of trouble. You will have loss-making trades in this zone, and then you will capitalize on this. So again, like I said, if you're looking for a solution that does not have losses, I doubt anybody would be able to, get that kind of a solution. But it is important to understand that whatever solution we are working on, what is the pros and cons that we need to understand. Like I said, if you're testing it for 5th December in the morning, most likely it will be disappointing. We will make 2-3 losses before we actually take a profit in this particular trade. So those things are definitely possible. I hope you understood the idea. In case if you guys have any questions, you can ask questions on Discord, or you could send us a message on WhatsApp. The WhatsApp link is in the footer, or you could message us on Discord as well. Hope you like this strategy, and in case if you have any questions, like I said, reach out to us. We'll keep doing webinars. Otherwise, we'll meet you again with a video and a different strategy. Thank you so much.